Let me also welcome on board Amit Khurana, the head of equities at Daulat Capital. Amit, good morning and thanks so much for joining us. Now, we've heard this news flow coming in for Gland Pharma. Overall, not looking good for that company. But if you take a look at the sector on an overall basis, year to date, it's a very close number two to realty. Tell us what's your outlook going ahead? Because as Nuresh and Kunal were pointing out, it's a day of defensives. Do you believe pharma could be a good sector to watch out for today and also heading into 2025?
Sure. Thank you. Thank you for inviting me. I won't be able to comment too short-term, sort of situations for today or tomorrow or for the week. But I think largely, pharma has its own sort of potential through the year CY24. And as we get into CY25, I think some of the vectors are seemingly pretty well placed for the sector to deliver high single-digit volume growth on the domestic front. And even on the US business, some of the franchises should do reasonably well, while there are pricing pressures in some of the particular molecules. But I think largely the trajectory seems to be pretty well placed. Quite a few companies have launches which are in the second half of CY25, and I think that remains the basis for us to remain positively aligned for FY25 and over the medium term. So if I were to put it in a nutshell, we are positively aligned on pharma, but we're very specific in what we like and what we would prefer to recommend to our clients.
Right. A very good morning to you, Amit. The shareholders for joining in the conversation. I just wanted to understand what are you penciling in when you talk about the Indian markets? Because come January, we will be actually in thick of news flow. One, back home you'll have the earnings season. Then all eyes will be on the budget. What the union budget is going to offer for you. But apart from that, when you talk this time around, we have a lot of global events, and major one being that you will have finally US President-elect Donald Trump actually take charge of the US administration. So what should one actually pencil in when you talk about the Indian market, at least for the first few months when you talk about trading for the calendar year 2025?
Sure. So I think the first half of calendar 25 will have all these developments, throw up a lot of possibilities, a lot of imponderables. And our take is that this is a market which is going to be bottoms up. Portfolios need to be aligned in favor of rural. That's been our stance for the last 4 months odd, 5 months odd. And we continue to maintain a big picture hypothesis wherein we believe rural should do relatively better than urban themes. Domestic should be the preferred way to look at it. Domestic businesses should be preferred over export of businesses. And you need to be very bottoms up in terms of what you're owning and what you're overweight on the portfolio. To the point that you raised, I think while there is a lot of discounting which has already happened on the Trump 2.0, we saw a massive dollar rally. We saw FPIs pulling money out of India and emerging markets at large. We've seen a whole lot of other ramifications coming out to play. But I think the real thing is as to what the first few days of the administration show up, whether it will be a situation of just taking arbitrary decisions, announcing tariffs right away, and to what extent. I think those are things which will keep the markets on tenterhooks, investors on the watch, or is it opening a door for negotiations and coming to the table? So all these imponderables, I guess, lead us to a hypothesis wherein the first half could be possibly very, very tricky to navigate, and therefore you need to be very bottoms up and very, very stock specific. That's the stance with which we are going in.
Okay, Amit, thanks for that view coming in. Also wanted to get a sense of what you are making when it comes to the sectors that could be abuzz early next year. Also, like you mentioned, Donald Trump coming into power, his first 100 days of administration are going to be closely watched. What sense are you making of the IT sector in light of that election and the administration change happening in the US? And also a couple of views on other sectors that you think could do well heading into next year.
Well, our conversations on the quarterly, we usually talk to the companies just on the quarter end. They seem to be suggesting a wait and watch mode. There is obviously a lot of, shall I say, skepticism, if I were to put it, saying that we would not like to take a too preemptive a move. But having said that, there is also a very high probability of tax cuts being, in the place on the corporate side, and that could lead to some spending, increases for the IT budgets. If that were to be the case, then obviously it will give a lot of, tailwinds for FY25 visibility for Indian companies. But again, as I said, it's a wait and watch. Everybody is, just taking it too close to the body and just wanted to see how it goes. As of now, our IT stance is neutral. We've been neutral for quite some time. And, some of the names that we've liked are, rather than IT services, we're playing on the product side or we're playing on the digital side. Specifically on large caps, we like the LTIM and we like HCLT at a certain price. That has been the stance, and that stance has not changed. I think if any possibility of change, I think it will only work around once we get the visibility for 25 and beyond, which hopefully one should get by the Q4 earnings are out. Overall, I think from the sectoral perspective, as I said, we've been less focused on sector macro trades. We've been more focused on the bottoms up trades. So we've been very specific on rural consumption, as I highlighted. We've been positive on durables. We've been positive on discretionary themes. And within those also, we like specific stocks. And that's what we've been recommending to the clients.
Amit, also share in your view, give us your perspective on what you believe the first half, especially of 2025, could look like. And do you believe it's going to be at least the half year, if not the entire, a good year for your defensive names like FMCG, IT, Pharma? Pharma, you gave us a view. Also tell us what you are penciling in for the FMCG sector, because we are seeing some trouble brewing on that front as well.
Yeah, I think the problem with FMCG has been, a double or a triple whammy depending upon the names that you're looking at. Essentially, the real wages on the urban side have not grown. They've actually grown negative. And, fortunately, the rural side has recovered with positive real wages, a lot of other tailwinds operating. So that is helping them to mitigate this entire slowdown on the urban side. So unless we see a reversal on the urban side of the business, it's difficult to make a very strong case for FMCG stocks to start outperforming over a period of time. Having said that, one cannot rule out that, they are extremely oversold, in some cases quite underweight positions or neutral positions. So you could see some pullbacks, but for us to make a fundamental case for FMCG to become overweight at this point of time looks quite challenging. So we're probably, keeping our focus more on the discretionary side and more on the franchises, which have a higher weightage on the rural side. That's the way we are playing it. But overall, I think other sectors that you could look out for are not directly related to consumption, but they could be proxies which could also benefit from the spillover effects of rural doing better. For example, you could see some of the auto-related consumption starting to do better. You could also see some of the building material consumption starting to do better, and some of these stocks have turned extremely attractive on valuations. So those are the positionings that we are taking at this stage.
Thank you so much for that, Amit, for giving your view when you talk about the FMCG sector and also the consumption space. Thank you so much for joining us on the show as well, and a very happy new year to you in case we don't interact with you just before the year. And thank you so much for joining us on the show.
Thank you.
If you like this video, then like, share and subscribe to ET Now.